The Asian session is the worst time to trade Forex, and right after the Asian session, we have the London session, which is the best time to trade Forex because it's the most volatile time of the market. We know that Forex traders, we make money when the market is volatile. We don't want anything slow or choppy or boring. We want fast, aggressive moves in the market because that's where the money is made. The best time to trade Forex is the London session, and in this video, I'm going to be showing you how to trade the London session, how to catch 50 pips, trading with my strategy using double tops and double bottoms, also known as M and W formations. One thing you need to understand is you need to understand the characteristics of each session. I see a lot of people trading the Asian session, which is the worst time to trade, the absolutely worst time to trade, because the market doesn't usually move during that session. The reason why they make this mistake is because they don't understand the characteristics of each session. Now, the characteristics of the Asian session is sideways movements and consolidation. The market doesn't move during that time. And the Asian session lasts for about 8 hours. And after that 8 hours, we have the London session, which is the most volatile session of the market. We usually have breakouts during that session. The London session usually breaks out of that consolidation that was previously in the Asian session. Now, after the London session, we have the New York session. Now, the New York session tends to be a reversal session. So after the London session has gone in one direction, the New York session usually comes to reverse the trend and then end the day in consolidation. Understanding this really puts the game in your favor because now you know when to step on the chart and when to go off of the chart. Now, let's get into the chart. Let me show you how to trade the strategy using double tops and double bottoms, as others call it, M and W formations. So without further ado, let's get into it. Awesome. Now we're on the chart. So to quickly explain what I was talking about, I'm gonna draw a diagram here to show you what you're going to be looking for in the charts. Now, this box I just drew out here is our Asian session, and during this Asian session, I'm gonna have sideways consolidation for about 8 hours, right? And then coming into the end of the session of the Asian session, you're gonna have London session, which lasts for about 4, 5 hours, 6 hours, right? So what's going to happen is the market is going to break out of this consolidation, and when it breaks out of this consolidation, it's going to give you an M formation or a double top formation like this, right? And the moment you see this double top formation, a very clear double top formation, all you have to do now is enter this double top formation at the second leg, right, at the second top. Right, you can also call this an M formation. I usually call it an M formation. So you can enter this M formation right here like this. Once you enter here, you're gonna sell, put your stop loss above, about 10 pips above the high of the structure, and then you can expect the market to go all the way down like this. You can target these lows as a take profit target, right? So what this is going to look like is you're going to enter a short position here. You're going to draw this down here, and then you're going to put your stop loss somewhere up here like this, right? So this is going to be your entry somewhere here, and your take profit can be anywhere below this structure. The same thing applies for a downwards structure. So you have your consolidation all the way here in the Asian session. Coming into London session, you're going to have a breakout to the downside. You're going to look for a double bottom or a W formation, and then you're going to enter the trade. You're going to buy right here on the second leg, put your stop loss below, and then you can target anywhere above here as your take profit target. So this is basically the structure, right? And we're going to be using two moving averages for this structure. That the first moving average we're going to be using is the 50 moving average, and the second one is the 200 moving average. Now these are going to be EMAs, exponential moving averages, right? So we're going to be using these EMAs to identify the trend. So to identify the trend is very simple. When you have the 50 moving average below the 200 moving average. Now the 50 moving average is the blue line, and the 200 moving average is the black line. So when you have the 50 moving average, which is the blue line, below the 200 moving average, that tells us that this is a downtrend. And when you have the 50 moving average above, when you have the 50 moving average above the 200 moving average like this, that tells us that this is an uptrend, right? So you're going to be using that to identify your directional bias. So that's how you're going to know if you're going to be looking for sells or if you're going to be looking for buys. Now, in this example here, we see that the markets the EMAs crossed over here. So it changed from an uptrend to a downtrend. So now we're going to be looking for what? We're going to be looking for sells. Now, since we're looking for sells, what are we going to be looking for on the chart? What pattern are we looking for? We're going to be looking for the Asian session consolidation, and then we're going to be looking for the market to break to the upside so that we can get an M formation and sell on this second leg, right? Since we're looking for sells. Now, if you look on the charts here, what are you seeing? We have this EMA crossing over here, so we're looking for sells. So what can we see here? This gray box signifies the Asian session. This pink box here is the start of the London session, and then this second pink box is the start of the New York session. Now we have this Asian session consolidation here. What happens? The market breaks out of this consolidation. If you draw a line here, you can see that the market breaks out of the consolidation zone. All right, so let's go back to where we were. Yeah, so we can see that the market broke out of this consolidation zone here. All right, extend this out, so and gave us this M formation here like this. So basically what you're going to be doing is you're going to be entering sells here on the second leg, or if you're not comfortable entering there, you can enter on the break of the neckline. If you prefer to enter on the break of the neckline, there are different ways of entering the M and W formation, but all you have to do is make sure that your stop loss is above the high, right? So you can put your stop loss maybe 10 pips above the high like this, and you can catch this for about 60 pips, 50 to 60 pips, right? So the next day you're going to be looking for the same pattern. Here we have this same pattern, but this was induced by news. So this is a news candle here. That's why it's so aggressive like that. So this is our M formation here. Or if you scratch out this one, you have your M formation like this, right? Which is also a head and shoulders pattern, right? And we can see that the market broke out of this consolidation here. Coming into London session, we have this move to the upside, and then gives us this M formation. So you're basically going to be entering on the second leg of the M formation. You can see this engulfing candle confirms the second leg of this pattern. You can put your stop loss above the highs like this, and then you put your take. You can go for about 30 pips. This went for about 35 pips on this one. The next day you have the same thing. So we have our Asian session consolidation here. So we have our breakout, the market breaks out and gives us this M formation all the way up here. All right, and then you're gonna enter your sells maybe on this engulfing candle, or maybe on this candle here, anyone you prefer. All right, you can put your stop loss above the highs like this, and then you can go for about 50 pips on this trade. All right, the next day you can look for the same thing. Here they didn't really give us an M formation, a very clear M formation, but on the 5-minute chart, this is a very beautiful M formation, because you can see that the market, this candle went all the way up here and then came back down and then consolidated, and then the next candle went back up there and it came back down. So that's your M formation right there. Right, so you can enter this here with your stop loss all the way up here, and this went for about 43 pips. Right, so let's look for a buy scenario. Let's look for an uptrend. Let's see if we can find an uptrend. So this is a very beautiful example of an uptrend, right? So we can see that the 50 EMA crossed over the 200 EMA right here. So we have an uptrend. We can see this W formation that occurred down here, and we can see that the market broke out of this consolidation here. Right, so you're gonna be entering your trade on this second leg here. You can put your stop loss below the lows, anywhere below the lows, and then you can, if you went for 80 pips, this went in your favor, right? So the next day we're looking for the same pattern. We have our Asian session consolidation here. This one didn't really break out that much, but we have this stop hunt to the low here, and this looks like a very big W formation. So if you entered here, your stop loss would be below the lows like this, and then you can basically target 50 pips or 40 pips on this trade. All right, so the same thing happens here. We have our Asian session consolidation. The market consolidates during the Asian session, and then the market breaks to the downside, gives us this W formation. You simply enter on the second leg here, with your stop loss below the lows, on target. If you went for 40 pips, this would have hit your target. This went for about 100 plus pips or more, right? So the same thing here. This didn't really give us a second leg. If it gave us something like this, it would have been better. If you found this video helpful, click the like button, subscribe to the channel, and also if you want to join my free Telegram channel, the link is in the description.